So I had a client call me just 2 days ago. Their renewal's coming up and their mortgage payment is jumping by about $1,000 per month. They asked me, Joe, is this what everyone is experiencing right now? And is there anything we can do about this? It was a really sad situation because these clients are great clients. They're a nice family. They have good credit and they're just trying to live a very comfortable, but also not very extravagant, but comfortable life, right? So they're not extravagant with their spending. And they both work full-time positions, but to experience an automatic jump on their mortgage payment by $1,000, that is something that they are having a really difficult time wrapping their head around. How are they going to do this? What are they going to have to do? Well, I took a look at their file and there are some things that they can do. And if you fall in this situation, stay on this video. I'm going to give you some tips, really helpful tips. One thing I noticed is that even though rates have gone up across the board, their lender actually was coming back to them with a renewal that was 1% to 2% above market rate. And I'm thinking that they are doing this because their thought is, well, people in Canada think rates have gone up like crazy, so these clients probably will just sign the renewal back and accept that rates just went up. Well, the rates were 1% to 2% above market rate, and that's going to save them hundreds of dollars if they go with a lower rate lender. But if they were to just sign the renewal, they're going to pay hundreds of dollars more. So instead of paying $1,000 more, we're already looking at, $200 to $300 less with that 1% to 2% rate reduction. Okay, so that's one. So shop around is the first tip, because just by them calling me, we're going to save them a few $100s a month. Just by that. The second thing is that they've already been paying their mortgage for years, right? So one thing that they can do that we're looking at doing right now, they're going to let me know, but they can actually extend their amortization. So the amount of time they have to pay off that mortgage back to 25 years. Or they could go up to 30 years if they really wanted to. Some lenders even offer 35 years. Why am I saying that's a good idea? Well, for the time being, rates are pretty high. And we're already hearing that the Bank of Canada may lower rates in 2024, in late 2024, maybe 2025, maybe 2026. But the fact is, they don't have to stay in that higher amortization for the rest of their mortgage. They could go into that for 2 or 3 years, bring their payments down even further by $200-300 more dollars. And then when rates come back down, or they are in a more financially well-off position, they can decrease their amortization back. So that's tip number 2, is actually extending the life of the mortgage temporarily to give this family some relief from this jump in mortgage payment. So even though their mortgage payment on their renewal is jumping about $1,000, I'm going to save them about $200 to $300 by decreasing the rate with a new lender. And if they go ahead with the higher amortization, my apologies, they're going to be able to save another $200 to $300. So it's going to bring that $1,000 jump to potentially $200 to $300 jump. So those are 2 tips I want to give you today. Look at shopping around when your renewal comes in. And number 2, look at increasing the life of your mortgage only temporarily. I do not recommend that for the long term until the rates come down or your financial situation does improve, to give you that margin to be able to make those mortgage payments into the next few years while rates are where they are at. So my name is Joe Bladek. If you're just tuning in or getting to know me, I'm a mortgage broker in Ontario with 14 years experience financing real estate. If you're looking for a mortgage renewal consultation, feel free to connect with me. I'm never too busy to look at your mortgage and be happy to discuss your renewal options with you.